The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Morning Market Kickoff. 9:05 a.m. Nice morning, kind of breezy out here in Florida. Cannot complain. Of course, it will be much hotter later in the day. Taking a look at some 10Ks right now. There's some companies I want to go over. Mainly Clearwater. We're talking about Castellum just a little bit. They are paying off some of their debt, right? That's that fun little cybersecurity micro cap that is probably small cap now, but seeking to expand more into the military, servicing the government. We've liked the positioning, researched them a little bit, liked their CEO, they have a whole new chain of command, and the guys are very, very baked in to military culture. Paying off the debt is very nice. A lot of acquisitions that they've been doing that hopefully will pay off for them. So we'll talk about that a little bit. The chart has held actually quite well. This seems to be a pretty strong bottom for Castellum, right? And I mean, you know, considering everything that has happened now, okay, you're talking about an $81 million market cap on this stock, right? And but it has held quite well, right? Even through a lot of this, violent swing to the downside. This was just pumpiness. It really blew my mind. I was thinking about it last night, but like in December, the amount of pump and dump that existed was immense. Now, what I thought was a little bit different about Castellum is this had some interesting trajectory prior to that. And so as opposed to other things, like Cooler, or Ocean Technologies that were just total pump and dumps. This one had been interesting for quite a while. And now you got a lot of bag holders in this area, of course. So, if you get any, decent movement to the upside like this, right, even 150, hey, let's get close to that gap and let me cut my losses. Let me get out of this equity. So there's a lot, to deal with when you're talking about very small market cap companies like this, But those can be fun. Let's take a look right now. Of course, we don't have the market open, but we're taking a look at the E-mini. Your futures are essentially flat there. We have gold continuing to move up right now. Obviously, some nice sell-off yesterday. Kind of expected, of course. This thing has been moving with más fuertes, It's been really quite impressive. Taking a look at everything else as well. You're just continuing to have chop in the yields. Your 10-year yield is down somewhat, about 10 basis points, trading at 4.32%. Not a lot of conviction there. Duration 30-year is 4.78. When you had a high about, oh my goodness. I didn't realize on the 21st was at nearly 5% there. And then, your 2 years coming down, but still around 3.8 currently. Take a look at what else we got. Excuse me. We have copper trading off 0.11%. Futures right there at $4.83. Silver off about 0.41%. The futures there. Crude continue to come up. I do get a little bit nervous now. Of course, we went over. If you didn't listen to me yesterday with when I had Teddy Kexet on, definitely check out that interview. It's on our YouTube channel because he brings up good point about light sweet crude, but then, additionally, he has a good strat, which a lot of that is just sell these kind of rips, right? And if you look at it on maybe more market dynamic type of deal, you have OPEC who really wants to flood oil. You have smaller countries that are affiliated with OPEC Plus. Obviously Kazakhstan was the example that we went over yesterday. They don't want to do that. Because those kind of countries make a large amount of their money from oil. They probably have production costs that are not much higher than what the price of a barrel would be. So you can obviously get conflict that way, but definitely probably a choppy future market for light sweet crude. Going into summertime as well, of course, will increase demand. But if they're going to match this with, a massive increase in output, then, you're not going to get to see that nice kind of squeeze in prices. It doesn't seem like it's any major rush, of course, right? Now, this was an extreme low and just kind of snapped back right from that. But it seems like we have kind of a ceiling right now at 65, at least in the near term. We'll probably float between 65, 60. But if that does establish a really nice trading range, like you kind of see what it's been doing for, since about October to about the end of December there, you can have a really fun time playing that kind of stuff, So look, pre-market, you have Apple off 0.19%, Celsius up 0.35%. I've actually gotten back on the Celsius game, and not bad. Celsius sponsor us. How about that? Disney trading, wow, look at that, at 87.75. Trading up 0.53%. What happened here? Recession, I know, right? I mean, that's just kind of the sell-off that we saw in the rest of the market. Man, I don't know. People love Disney. I mean, I would be curious to see how much of their kind of attendance gets cut in something like a true recession. I mean, I would say too that like a lot of people are already squeezed, right? And the attendance is still positive. Like the squeeze has been going on for quite a while among a large swath of, the American consumers. And it has some resiliency there. Now, no doubt that will cut in, right? I mean, for sure. There were some issues with Disney Hong Kong as well. I don't know. They had a video post, right? This was going around social media, and I don't know if there was a holiday going on or what it was, and I want to kind of do some more reading into that. But I mean, these parks were like dead, So that'd be kind of curious to see if that actually is a trend that's developing, or they hit at a weird time and people were back home for some kind of holiday. Of course, they released Snow White, and I think that had a lot of negative backlash. It's very weird because when you had your CEO returning to Disney, he wanted to focus a lot on narrative drive, right? And it doesn't seem like they're doing that still. And now, not to have any input in cultural discussion, because I think that's not necessarily useful here. But they're clearly, Disney has become in this weird way almost like a battleground for cultural conflict. And that makes me feel weird about the company, meaning, I don't know what kind of, punitive action half the population can exact on Disney if they refuse to, buy a streaming service, refuse to go to their parks, whatever it might be. But, this has been a weaker stock for a long time, right? Of course, I mean, yeah, I know, you look at it from November, it's like, hey, that's pretty strong. But if you remember, I held this stock for quite a while, and it just was not doing anything. I mean, we're nearly back at like October 2023 levels, just a little bit higher. We're November 13th, 2023 levels. I was so happy when it railed up because I got out of that. Folks, they're right there. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Give me a second here. So, Okay. Some cool headlines going on right now. Of course, you know we're in energy fuels. That is you. Okay. We like that for critical minerals, for rare earth elements, especially in investing in that by the government in a way to kind of combat China. Okay. So you have a new headline coming out. This is on CNBC. And a lot of this stuff is always going to be headline driven in a major way. You have Trump aims to fight China's control of minerals by investing in miners. Trump administration considering investing in companies that mine and process critical minerals. Quote, this is the Interior Secretary, Doug Burgum. He says, we should be taking some of our balance sheet and making investments. Oh, that's an interesting thing. I remember when they came out with the idea of like a sovereign wealth fund. It's kind of interesting, you know? But the U.S. may need to take a, quote, equity investment in each of these companies that's taking on China and critical materials. Hey, you know what? I'm not opposed to that because we own energy fuels. So let's see what that's doing pre-market, up 1.56. This will probably give it a little bit of a bump today, for sure. MP Materials is in a tougher kind of situation. I mean, obviously, if you look at it, you know, from a technical perspective, I suppose, with the volume, this is a lot to try to get back into. But if you look at, you know, the fundamental part behind MP Materials is that they shipped a lot of that stuff to China, you know, and so having to switch over and then, you know, kind of, you know, discover a market in the U.S. for it will take some time. You know, and I think that's also the case with energy fuels. Luckily, they're not hyper exposed to China in the way MP was. This will still take some time to kind of mobilize. You know, these are just a few years until we start seeing some stuff. But that is how long I'm intending on holding, you know, something like energy fuels. Maybe looking in to get to some Camor or something like that. Let's take a look at CCJ as well. I am, I like CCJ too. Now, these guys aren't doing too much rare earth, at least right now, but obviously the largest producer of uranium in the world. I do think there is some bullish murmuring for uranium, especially for nuclear power in the U.S., right? Especially from the Department of Energy. Take a look at Oklo. Sam Altman is stepping down as well. Oh, looks like it's liking that quite a bit. But this is another equity that is held very well. I don't necessarily want to hold it. I don't think they have a product right now. I mean, I know they don't have a product right now. They burn through a lot of capital. Now, one of the positive things that Oklo has going for it versus something like a NextEra or whatever, and we're talking about in the realm of these smaller, what are called SMRs, small modular reactors, is that I guess the Army is and the Air Force are looking into put stationary small reactors on their bases. You know, if you want to talk about it just like, you know, like we're hanging out or something, that is, I think, the future and how we're going to have to do this kind of stuff, right? I mean, if you look at the data center build out we have to do, whether that's just for cloud growth in general, whether that's for AI, whether it's really for anything, manufacturing, you know, these are really straightforward and intelligent ways of doing it. I mean, we literally have a rock that just emits energy by itself, just by the nature of being itself. And I mean, seems like a pretty straightforward concept, you know? And I do think the culture is softening up on this a little bit. Obviously, Chernobyl, huge. 3 Mile Island, huge, just completely baked in to the memories of a lot of the older generations. But the technology's gotten a lot better. You're talking about things like Oklo or like NextEra that use, you know, have different approaches. Of course, we've gone over this before with the technical approach that Oklo and NextEra have, obviously using what's called natrium reactors. I really do believe that this is going to be the approach going forward. And so it'll be interesting. It is nice that they have gotten, or they've at least, you know, they're allowed to bid on these contracts. One of the things I will say as well that I think is a little bit bullish on the time frame for adoption is, you know, Hegseth's kind of office. There has been I read up some on military news just to, it's kind of interesting to see what's going on. And a few months ago, you had a naval, very high, you know, naval chief basically saying, listen, we have dumped so much money into these kind of next-gen technologies. He was talking in particular about directed energy weapons, so basically shooting lasers at people, or really more missiles and stuff like that. And it's like, you know, we have this stuff, we have dumped tons of money into it, and it never gets adopted. And I don't understand why. This is a major problem culturally for the Navy. He brought up a few other technologies as well, and that seems to have changed maybe a little bit. There's some, you know, expediting of the adoption of newer things. We're now starting to see some high-profile further testing on things like directed energy weapons, and I think that, you know, will apply to more advanced power generation via things like, you know, nuclear reactors. I mean, they already run a lot of ships on this stuff, you know, so it's not necessarily a massive leap. And these things are a lot safer. It's not like you can just shoot a missile at an SMR and now you get like a, you know, Tsar bomba going off or anything like that. So, you know, we'll be following that a lot. But as far as the miners are concerned, I'm more favorable towards them and kind of their price movement on news of further adoption of technologies along the lines of what something like Oklo would produce. So yeah, I mean, take a look, put this on your watch list for sure, Energy Fuels, put all of them on. But with this kind of headline, this is very solid. And so really looking forward to market open to see. Of course, you still have, honestly, kind of depressed macro conditions going on. This isn't, you know, I mean, we're essentially flat right now, you know. In the futures, we might just have a completely flat day, you know, completely lose the steam to the upside. Like we did, you know, a few trading sessions ago. Let's take a look what else you got. You have VIX coming down a little bit here. NVIDIA coming right back up, which I feel like kind of interesting. Now, I mean, we were talking about in the realm of tech, I mean, like, Sky Hynix did phenomenally, right? There seems like the earnings reports are not bad, you know? And now, of course, the full weight of the situation that we might find ourselves in, you know, coming, what are we? I think July now with the tariff exemption or the, you know, pushing back the tariffs. You might not feel that currently, but through this first quarter, I mean, a lot of these companies have done very well. ServiceNow knocked it out of the park. Sky Hynix did. ASML was not bad. I guess you have Micron not doing horribly. So this is a very resilient market still, you know? I want to talk some more about, in this kind of realm of critical materials of tech, we're going to talk about Wolfspeed when we come back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Yeah, this is another one, ARRNF, American Rare Earths. The Halleck mine is their major game, right? And they're going to do, again, our favorite thing, neodymium, praseodymium mining. Same with UUU, same with MP Materials. The mine they're using, Halleck, seems to be extraordinarily promising. Only issue is you're dealing with OTC here, you know, and I just hate this kind of stuff, you know. And so I did email them and I was like, hey, listen, you guys thinking of, you know, going to NYSE. And sometimes, honestly, companies will email you back. I mean, a lot of times it's just like, we're not going to talk about that, which is fine. I didn't get anything back from them yet, so we'll see what happens. But if, you're risky, that's one to look at, I guess. Let's take a look. Someone else, Dan in the Den, looking at WWR. Westwater. These guys, what, do graphite? About 12 billion global market for graphite. A lot of that comes from China. Very true. Yeah, it'll be interesting to see. Looking at these guys, they're not like debt laden. I think this is still really exploratory, right? Yeah, I'm not seeing like a ton of anything they're pushing out. There's just, it's fun to look at these smaller mining companies, I mean, obviously, remember with like Tom and VGZ. I mean, VGZ's had an amazing run. That is so wild to think about. This is one that Tom loved and just held on. Of course, we'd have Fred Ernest on. He's the CEO of Vista Gold. We've had him on quite a few times. They operate out of Australia, have a very nice, high quality gold mine. Let's take a look right now at Wolfspeed. These guys obviously in a very tough spot. Let me try to get their 10K up here. Yeah, so I mean they have they're very leveraged is a massive problem. Huge amount of debt, at least for their capital structure, huge amount of debt, very small amount of cash going on here. One of the things that I was concerned about with Wolf is, they do the silicon, oh man, what is it? Silicon carbide. But then they also, and that's for their chips. And those chips are very interesting, right? Because the silicon carbide can 100% be used in robotics. Again, there's a lot of what we're talking about when I come on here is, what could be poised to benefit very heavily, headlines from the advancement of automation or robotics or whatever. So they do silicon carbide for that. Again, I think capital structure is kind of difficult for them right now. They are improving that. One of the things I was very nervous about with them was in their RF business. Okay, they make 100 millimeter gallium nitrate wafers. And if you've listened to me, you might say, hey, gallium? Wait, I know about gallium. What is that? And that is the rare earth element that the US does not produce at all. And most of that comes from China. That will be, we do have gallium deposits in the US, very large ones, but there is no development on getting that stuff out of the ground in processing it. So I was very concerned that portion of revenue was going to be, that nobody was really seeing that yet. This drop down on very large volume is going to be from news that they might be losing CHIPS Act funding. Obviously, that'd be pretty devastating because that was a great source of capital for Wolfspeed, and they're already very debt laden. So the question is how can they generate more funding? It'd be interesting to kind of see. And clearly, I mean, the market did not see it as an overreaction in any capacity. We've come back up a little bit from that, but your low was reached days afterwards at about 206. This is probably just the floor. And everyone else holding is just either has to hold or they're not going to sell it here. What is positive about the gallium nitride business is it seems like they are divesting from it. I guess they're selling it to Macom for, and this is the RF purchase agreement. They're selling the whole product line. It's only for $75 million in cash and then 711,000 in shares. Yeah, I mean, that's not a huge amount there. So their revenue from the RF business was $26 million. That cost of revenue for them on gallium was $30.8 million. After everything considered, you had a loss really of $18.5 million in that section. And so it's probably good one, they just got rid of it. I feel bad for Macom. because if they want to get that kind of stuff, it's now going to be pretty near impossible. And again, you know, even with word that the tariffs might be coming down to something like 60-50, that is still effectively, you know, an embargo, right? And I guess China has spoken last night, and they said, yeah, I mean, we'll make a deal, but the deal has to be that you just remove these tariffs. Like, we're not going to deal with it. So we're still, you know, kind of locked here right now with that. That's kind of my overview on Wolfspeed. They no longer have that kind of risk exposure from the gallium trade. Of course, that will be nice and kind of condensing what they're doing. Unfortunately, I still think they have problems with probably funding here, adoption of now what is their main line, which is going to be silicon carbide. That's kind of where we're rocking with Wolfspeed. And it's a shame because I want this company to do very well. So 28. I mean, yeah. So there's only like 10%, maybe a little 14%, just rough maths of their yearly revenue last year was coming from that RF, and that's just revenue, right? So it'll improve their net loss. Their net loss is about $372 million. So that's you know, that'll be a decent improvement to have that off, but we'll kind of see what happens with the adoption on that. So that's Wolfspeed. Of course, we're following it just because we want American Semiconductors to win. Speaking on that, you have Intel Corp coming up 2.51%. Oh man, market is open. Look at me just talking. Let's take a look here. The SPY up 0.2% at 536.47. The composite trading up 0.41% at 16,775. Dow Jones Industrial off 0.42%. Okay, you get the dollar still continuing to come down a little bit. We were trying to crest that 100 mark, did not reach there yet. Trading at 99.35. Russell up slightly at 0.16%. Crude oil roaring, the futures right there up 1.22. And the gold contract continuing to make some movement today, although it seems like we started a little much higher and kind of took its profits there. It's probably going to get a sideways day with a lot of this stuff, I would say, since everything is so, you know, really headline driven. Taking a look at the 10-year, trading at 4.32 currently. Let's look. Apple off, Bank of America up slightly, Celsius off 2.27. Nokia, I think they had earnings coming up pretty soon as well. Tesla up 0.79%. How about that? See if we can get any big news. Bitcoin, wow, flat 93,000. How about that? This has seen some really fantastic movement over the past few days. Folks, you stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, everybody. Jacob Shoup watching the morning market kickoff. We got a short, well, no, we have a full segment here, then a short one afterwards. Yeah, not a lot going on. Guys, if you're not in the den, we've been talking here over the break, definitely hop in. Dan, what are we looking at here? We got BBAI, 2.78%. Austal USA's next-gen submarine construction using AI and digital twins. How about that? This was such a fun time, man. Like in December and February, these things were just skyrocketing in value, these smaller cap companies. Let's take a look. Right now, man, you know what this morning was for me when I was looking through some different headlines, different equities, was just all of my initial notions were completely dashed. And my first thing was, okay, Wolf's in a bad spot because of gallium, right? Okay, that doesn't seem to be the case. The next one is going to be C1, Clearwater Analytics. So what these guys do is they provide very good programs for accounting, basically, right? This helps collate a lot of the data, place it in the correct order, and then make kind of observations based on it. Obviously, we're trading very low within the past, what are we looking at? The last time it was around this area, this is really its gap up, right? From August 2nd on some decent earnings. Another major gap up on decent earnings here. I'm curious with this. Looking at least how the prior sentiment was, you're looking really at a price around this $30 area for the company. I was looking at it, they have some really decent growth. Their last earnings report seemed very good, but the closer you looked at it, they have some weird stuff going on here. They were actually positive for net income last year, right? And I think a lot of people were very hyped on this. They have had pretty strong revenue growth with minor cost of revenue growth on top of that. Gross profit is still very good, hovering. Let me look at my spreadsheet here. I think around 73%. Yeah, 73%. So I mean that's really solid, right? They have a lot of operating expenses. Okay, so this research development is obviously increasing in a major way. Total operating expenses has increased. Now, it is still being outpaced by gross profit, which is very nice because we haven't seen that in the past, right? At least the year prior, where you had $277 million versus, and this would have been total OPEX versus $261 million on gross profit. So it is nice to see that flow over. Regarding net income, this number of $427 million on net income versus the year prior of a loss of $23 million, and then in 2022, a loss of $6.7 million. This is really done from this benefit from income taxes. This is a one-time, non-recurring, of course, kind of addition onto their sheet here. So it's a little bit strange for me. I think that's unfortunate because I was very hyped on this. If you kind of take that away, you're, just dang near close to what you were doing last year, And on top of that, was looking at their acquisitions. So they acquired 3 major companies. Let's pull this up here. Okay, and this I think maybe on the long term will be good for Clearwater Analytics. But now the major question is how good are they going to be at integrating all these kind of tools, right? And additionally, I would say that you have 3 companies they've acquired, right? One is private, so we don't know. The other just didn't have any revenue really, and then the third had some good ARR. They had not as good of margins. Okay, regarding gross profit. So you're taking a look. That's Infusion. They had an ARR of 200 million. They had a gross profit of 36.9. Versus 72%. That's about an 18% margin there, which I think is weird. They paid about 1.5 billion for the company, given about like a 7 times multiple on it. The other multiples were much higher. So a lot of this now, if they can properly adopt this kind of stuff, okay, I think it will be very beneficial for them. I think they're able. Whereas some of these other companies, either, private, so it's kind of hard for us to tell, or you have something like, really pre-earnings in a major way, or something like Infusion, that doesn't have a massive kind of margin. Clearwater Analytics can really leverage their current client base, right? Which I think they will be able to do more with these companies than the companies were themselves before they were purchased by Clearwater Analytics. So that is something I want to follow. You've held very well around this level, okay, of about $21. And if they can if they can effectively integrate these kind of companies, I think we're going to look at some very strong revenue increase, right? And hopefully some very strong gross profit increase. If they can lower a lot of their operational expenses, and we'll have to see. Give me a second, we can look at research here. Yeah, they don't really explain. Okay, let's see here. Increase in research development expense 2024 is primarily due to increased equity-based compensation due to grants of additional awards to employees. That's okay. Let's see here. So they're building it out that way. That's not bad, in theory, that's just a long-term kind of play, which is not, you don't hate to see them doing that. So additional research development expense increased due to increased technology costs for higher utilization of third-party cloud computing and other third-party IT services, increased allocation of facilities costs due to additional office space. These increases were partially offset by decreased use of outside services and contractors due to lower utilization of third-party consultants on development activities due to focus on internal hiring of developers. Okay, so they're like in this kind of investment phase for that, right? I don't necessarily think then that R&D will contract. You might get a slowing of the increase in research and development, which was really, the major driver of operating expenses here. You're looking at research and development costs of 150 million versus a sales and marketing of 67 and a general administrative of 98. So yeah, a lot of that will kind of flow into probably general and administrative at some point as that kind of balances out. So this is one that I want to watch. A decent market cap of 6 billion here. You have PE of 13. Is absolutely one that I will continue to watch. If I had to say anything now, which would just be for didactic purposes or just conversational purposes, I could definitely see this traversing back up above this 25 level. Of course, one of the major threats that they have is they derive their revenue from fees of the assets that their clients have. If that gets messed with in any way from these global trade wars, I would need to spend more time to even begin to project what kind of impact that would be, because it's not very clear what all of their clients are, but there is a risk profile there. So folks, stay right there. We'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup. This is the last segment of the Morning Market Kickoff. It's got a short little segment going on. We got SPY trading at 0.62%, Composite at 0.96%, nearly percent. Dow Jones Industrial kind of pairing some of those losses there, and nearly flat right now in the Dow. There's Russell Futures trading up 0.54% at 1936. Crude coming down a bit, gold coming down just a little bit. Taking a look at some of the earnings, we have Alphabet, we have Google, really, Alphabet, of course. After the bell today, Procter & Gamble came out, some of their earnings. No matter if someone did well or not well, there was some conversation going on with tariffs, right? Like, obviously, the companies got hit very hard. They really express how much the tariffs are going to be affecting them going forward. You have T-Mobile coming on after the bell as well, and then Merck, my baby, up off 2.06%. It's just so sad, because the tariffs are going to affect these guys as well. And China was such a good market for Merck. They obviously have the HPV vaccine going on there. No, that hasn't been that hasn't taken off in China the way that I think a lot of people who follow Merck were hoping. But they are developing out their veterinarian segment, right, which I think is very awesome. Of course, the obesity drug that they're working on in China was going to be massive. As China develops a larger middle class, people become more sedentary. They're going to go through exactly what we went through as America and exactly what Mexico is going through, right? So unfortunately, it just seems with the tariffs, it's kind of in a difficult position. But we get any resolution of that kind of deal, we might be in some play. So we'll definitely be following that a little bit closer. It would be nice to see their HPV vaccine kind of take off a little bit in those areas, particularly Asia. Taking a look at Pepsi as well. They're off about 1.61%. Obviously, international company tariff could be strange for them. Folks, thank you so much for joining me today. I will, again, be on at 3 p.m. with Tim Ord, so you don't want to miss that. We have Basil Chapman coming up next. Please stay tuned. We'll see you then.